What if I told there's a way to spot high probability trades using just 2 time frames? Today I'm sharing my golden zone strategy that helped me capture consistently 10 to 20 pips per trade. No complicated indicators, no confusion, just pure price action and market structure. Hey everyone, Forex here, and if you're looking for straightforward, no nonsense strategies to build your financial future, you are in the right place. Whether it's smart trading, side hustles, or online business opportunities, I break down complex concepts into simple, actionable steps that work for both beginners and experienced entrepreneurs. And before we dive in, make sure to hit that subscribe button and notification bell so you never miss out on these valuable insights. If you are new here, drop a like and share this video. Someone in your cycle might need exactly what we are sharing today. The golden zone strategy works on a simple principle. We analyze the bigger picture on the 1 hour time frame, but we execute our precise entries on the 15 minutes chart. This combination gives us both context and accuracy. Now, let's talk about how to identify supply and demand zones. To do this, we need to look for areas on the chart where the price has previously reversed or consolidated. We can use swing highs and lows to identify these areas. A swing high is a high point on the chart where the price has reversed downward, and a swing low is a low point on the chart where the price has reversed upward. To identify a supply zone, we are looking for an area where the price has previously reversed downward, indicating surplus of sellers. And to identify a demand zone, we are looking for an area where the price has previously reversed upward, indicating a surplus of buyers. If you are picking up golden nuggets, smash that like button and drop a comment. Now, let's look at examples of bearish and bullish candlesticks at extreme points. A bearish engulfing candlestick at a high point can indicate a supply zone, while a bullish hammer candlestick at a low point can indicate a demand zone. Other examples include bearish shooting star candlesticks at highs and bullish inverted hammer candlesticks at lows. These candlestick patterns can help us identify supply and demand zones and make more informed trading decisions. Now that we have identified some potential supply and demand zones, let's talk about how to validate them. Validation is an important step to confirm that the zone is strong and likely to hold. One way to validate a zone is to look for convergence with other technical indicators, such as trend lines or moving averages. For example, if we have a demand zone that's also supported by a trend line, that's a strong indication that the zone is valid. Another way to validate a zone is to look for increased volume at the zone. If we see a significant increase in volume at the zone, that's an indication that there's a lot of interest in the area and the zone is likely to hold. We can also use fundamental analysis to validate a zone. For example, if we have a demand zone that's also supported by a strong economic indicator, such as GDP growth, that's a strong indication that the zone is valid. Finally, we can use price action to validate a zone. If we see a strong bounce or rejection at the zone, that's an indication that the zone is valid and likely to hold. By using these validation methods, we can increase our confidence in the zone and make more informed trading decisions. If you are finding value in this strategy, smash that like button and share. It helps more traders discover this content. On the 1 hour chart, I look for engulfing patterns such as bullish or bearish engulfing. On the 15 minutes chart, I look for confirmation patterns like change of character, bullish or bearish engulfing railway track or railway line. These patterns help me confirm my trade entry and increase my confidence in the trade. Waiting for a pattern completion is crucial before entering a trade. It helps avoid false breakouts and ensures a high probability of success. By waiting for the price to respect the supply and demand zone and move in the expected direction, we can confirm the trade idea and increase our confidence. This requires patience and discipline, but it's a key component of successful trading. When placing a stop loss, it's essential to position it above or below key levels to minimize losses. For a long trade, place the stop loss below the demand zone, and for a short trade, place it above the supply zone. This helps to limit losses if the trade does not work out, while also giving the trade enough room to breathe and move in the expected direction. The 10 to 20 pip target strategy is a scalping approach used on the gold pair, aiming to capture small profits while managing risks. The strategy involves setting a take profit target of 10 to 20 pips with a risk-reward ratio of 1:1 to 1:5 or more. To mitigate potential losses, traders may break even as the price approaches the middle point of the entry and take profit levels, saving on potential losses. Additionally, traders can take partial profits along the way, allowing them to lock in some gains in case the trade reverses. After breaking even, traders can choose to leave the remaining position to run, potentially reaching higher risk-reward ratios of 1:2 or 1:3 or more. Beyond the initial take profit targets, by combining break-even points, partial profits, and potential extensions, traders can optimize their returns while minimizing losses, making the 10 to 20 pip target strategy a flexible and adaptive approach to scalping the markets. To calculate risk reward, we need to determine the potential profit and loss of a trade. For example, if we are buying at a demand zone with a stop loss 50 pips below and our take profit is 100 pips above, our risk reward ratio is 1:2. This means that for every 1 pip of risk, we are potentially gaining 2 pips of reward. A good risk reward ratio is typically 1:2 or higher, which helps to ensure that our winners outweigh our losses and we achieve long-term profitability. Welcome to our trading analysis. We are currently observing the 15-minute time frame where a sell signal is emerging due to the pattern and price action. Notably, our 1-hour time frame candlestick is exhibiting a bearish formation. In accordance with our trading strategy, we prioritize observing the 1-hour time frame for a bearish candlestick at a resistance level. We then switch to a 15-minute time frame to identify specific candlestick patterns, enabling us to enter a sell position. Upon entry, we set our stop loss and take profit levels. Our initial take profit target is 10 to 20 pips, as this strategy is designed for scalp trading, focusing on swift trade execution. When setting our stop loss, we typically place it at the previous high in line with our sell strategy. However, it's essential to acknowledge that market fluctuations can occasionally result in stop losses being triggered, even when placed at seemingly optimal levels. In approximately 10% of cases, markets may choose to test these areas, leading to stop loss activation. To mitigate these risks, we may set our stop loss beyond 100 pips, allowing for flexibility and adaptability in our trading approach. It's essential to note that we may choose to lock in trades at break-even and ride the momentum, potentially adjusting our stop losses accordingly by employing a partial take profit strategy after reaching TP1, followed by break-even and a focus on TP2. We can optimize our trading performance. As illustrated in this example, our take profit target was reached within a few minutes. By replicating this analytical process from the 1 hour to the 15 minutes time frame, we can consistently identify lucrative trading opportunities. Remember traders, this strategy works because it combines multiple confirmations, time frame alignment, zone validation, and pattern recognition. Don't skip any step. Ready to level up your trading? Join my free Telegram channel using the link below. You will get my personal trading checklist and daily market analysis. Leave a comment with your biggest takeaway and I'll see you in the next video.